Welcome back to Unconventional Lending. I'm Derek Bisson, and today's topic is going to be home appraisals. Whether you're buying, selling, or refinancing your home, a home appraisal is an integral part of the process. And the better your fundamental knowledge of this subject is, the more confidence you're going to have, regardless of your role in the transaction. By the way, the information we're going to be discussing today is universal for all mortgage types. Specifically, we're going to be talking about conventional appraisals, which, by the way, are also used for non-conventional, unconventional, non-QM, non-traditional types of loans, and also government-insured loans, such as FHA or VA. So regardless of your loan type, you're going to be getting some great universal information here. So stick with us and you're going to learn a lot. Before we get started, a quick note for the channel. If you like this sort of content, consider liking this video, sharing, and subscribing. All right, so first things first, what is a home appraisal? Simply put, a home appraisal is a professional, unbiased written report about a home's market value. Appraisals are crucial in the buying and selling process, ensuring that all parties involved are on the same page with respect to the property's actual market value. Now, you might wonder, if it's just about determining a market value, how different can an appraisal report really be? Well, at their core, they're pretty much all the same, but the devil's in the details. Let's take a closer look. At their core, all residential appraisals follow a standardized process. They assess and document certain facts and data about a property's condition, size, number of bedrooms and baths, function, and location. If you're buying a home, an appraisal report is actually there to protect you from accidentally overpaying for that home in a given marketplace. In the world of professional appraisals, there are essentially three major types of valuation approaches. Let's cover them. First is the comparable approach, the cost approach, and then the income approach. For the purpose of obtaining a mortgage, the primary way that a residential appraisal determines the value is the comparable approach. With the comparable approach, they research recent sales of similar comparable properties within a short distance of the home being analyzed. These sales are known as comparables, or comps for short. This standard method ensures consistency across appraisals, giving buyers, sellers, and lenders confidence in the property's assessed value rather than simply taking one party's word for it. Quick note, if you've ever heard of somebody referring to the cost per square foot or price per square foot valuation, this is a very, very simplified way to ballpark a home's value when trying to determine a marketing price for a home. Unfortunately, it's far too simple and doesn't take into account many of the factors like property condition, amenities, and other factors. The results from a cost per square foot approach can yield very different results from the comparable approach. And again, the cost per square foot approach is never used by a professional appraiser. All right, so now let's take a look at an example of the comparable approach. So what you're seeing here is a uniform residential appraisal report. This is the comparable grid. So as you can see in the first column, this is the subject property. It's the home that's being appraised. The second column is called comparable sale number 1. The third column is comparable sale number 2, and then comparable sale number 3. And if you go down the left-hand column, you'll see that there are all sorts of different things are put on this grid and compared. You'll notice that there are a lot that the subject property has in common with the comparables, which is good. You'll also see a difference in the gross living area, for instance, because most homes are not alike. Although it doesn't apply to this particular property, some single-family homes, for instance, have pools or other amenities that can be compared from property to property. So while this process may be standardized, there are a few factors that make each report unique. Let's take a look at a few of them. Location, location, location. Two identical homes can have vastly different appraisals if they're in different market areas. The same home that's on a beachfront property versus one in a suburban neighborhood, well, you can definitely expect a significant difference in value. Another factor includes upgrades and renovations. A home with modern kitchens and baths, energy-efficient windows, or a landscape garden can boost the home's value compared to similar but outdated properties in the same marketplace. Solar panels, for instance, can add value to a home, but only if they're already paid in full. That said, it's not always a dollar-for-dollar comparison like you may see on TV. For example, if you paid $20,000 to upgrade your kitchen, then you shouldn't automatically expect a $20,000 increase in the value of your home. It really depends upon the condition of your home versus the other recent sold comparables in your given marketplace. Let's also not forget about market trends. An appraiser must also consider the current real estate market. A booming real estate market can inflate home values, while a downturn can do just the opposite. Now let's cover the three main types of appraisals you'll find in the current market space. They include conventional appraisals, FHA, as well as VA. Now, on the conventional appraisals, these are good for conventional loans like Fannie Mae or Freddie Mac, but they're also used for other types of non-traditional, unconventional types of loans like bank statement loans, P&L loans, 1099 programs, etc. The FHA appraisals are similar to the conventional appraisal, but they have some additional data required by FHA. And VA are also similar to conventional appraisal reports, but they too have additional data required by the Veterans Administration. Both FHA and VA appraisals collect the exact same kind of data that you'd see on a conventional appraisal report, but they go a little bit further and they take into account more information about the home itself. Most of these have to do with quality issues about the house, including the quality of the paint, various safety issues, electrical systems, working appliances, HVAC systems, utilities, general roof quality, looking for any evidence of a roof or ceiling leak. They're looking for larger quality issues that might cause the homeowner problems down the line. All data on FHA reports and VA reports is stored using a case number system, respectively, with the FHA or VA for a period of 6 months and is attached to the home. So if one buyer backs out of a transaction and another buyer attempts to purchase the same home in a different transaction, the data stays with that home for 6 months. Now, all of the quality issues I mentioned are likely to come up on a more comprehensive type of report called a home inspection. Now, I always advise my clients to get a home inspection, and most realtors always have you do a home inspection. A home inspection is different than an appraisal. The home inspection is there to give you an in-depth analysis about every little thing about that house, making sure that every single faucet works, all the electrical systems work. They test every outlet. They test the AC system. They test everything about that home. The inspections usually take about 1 to 4 hours for a home inspection, and you get a really good comprehensive report. So you know everything about the home you're looking to purchase. Again, just to come full circle here, the conventional, FHA, and VA all ask the same questions, with the VA and FHA types asking just a little bit more information about the condition of the property. Now, if you're looking to sell your home or if you're refinancing and you're getting an appraisal, here's what you need to do to prepare. First, you're going to want to make sure your home is clean and is in tip-top shape, cleaned and tidy. After you've cleaned your home, take a quick look around the interior and the exterior of the home, and you want to be looking for anything that sticks out. For instance, items that could stick out are discoloration on the drywall in your ceilings. That's a real big one. That could indicate that there may be a roof leak or a pipe leak somewhere in the house. You also want to take a look and make sure that all the appliances work. You want to make sure all the faucets are working and not leaky. You also want to make sure you walk around the exterior of the home, and you want to make sure that everything is in tip-top shape. So look around the roof line. Make sure there's no form of defects around the soffits or around the flashing of the home as well. Doing all these things can actually make a pretty big difference in the overall valuation of your home. So make sure that it's in its best possible shape. Remember, a fair and accurate appraisal benefits everyone involved. It sets the stage for a smooth real estate transaction, and it helps you achieve your real estate goals. And that's it. We hope you found this information helpful on your real estate journey. If you're looking to purchase, refinance, or get pre-approved to purchase your next home, we lend in 29 states, and we would love to assist you with your transaction. Thanks again for watching. I'm Derek Bisson, and this is Unconventional Lending.